Silver just jumped nearly 6% in a single trading session. Gold is trading above $5,000 an ounce, and one of the biggest tech CEOs in America just fired 40% of his entire company and pointed directly at artificial intelligence as the reason why. And here's the part that should stop you in your tracks. Those two stories are connected. They are connected through one metal that most people are still not paying attention to. That metal is silver. Today is February 27th, 2026. This is your complete, unfiltered, no-fluff breakdown of everything moving the silver market right now. Stay with me because this is unlike anything we've covered before. Let's start with the raw numbers because they are significant. As of this morning, February 27th, 2026, silver is trading at approximately $93 per ounce, up nearly 5.8% in a single day. That is not a typo. Just 1 month ago, on January 29th, 2026, silver touched its all-time nominal record high of 121.67 per ounce. For the first time in history, silver crossed the $100 level. The entire precious metals community reacted strongly. Headlines everywhere declared silver had officially entered a new era, and then, in less than 24 hours, one of the most violent crashes in precious metals history hit. On January 30th, 2026, silver cratered. In a single session, it dropped from near $121 to $121 to an intraday low just under $75 per ounce. That is a 31% collapse in one day. For perspective, that was one of the single worst intraday sessions in the history of silver trading. Analysts were stunned. Retail investors were shaken. Some people called it manipulation. Others called it profit-taking at scale. But here's what the data shows right now. Silver didn't die. Silver bounced. From the lows near $70 in early February, silver has clawed back aggressively. As of today, it is back above $90, sitting near $93. And technically, it is once again in a local upward trend according to analysts at XTB. The gold-to-silver ratio has dropped to approximately 57.6, a level not seen in over 15 years, and that ratio is being watched very closely by sophisticated investors as a key signal. Here is what that ratio means in plain English. Gold is currently trading around $583 per ounce. Silver is near $93 per ounce. Silver is near 93. If you divide gold's price by silver's price, you get roughly 57. Historically, that number has hovered between 70 and 80. When it falls to where it is now, near 57, it is a signal that silver has become relatively expensive compared to gold, or that money is rotating heavily into silver. Either way, the market is sending a strong signal. Now let me tell you about the other massive story that dropped this week and why it matters directly to anyone watching the silver market. On February 26, 2026, Jack Dorsey's Block Inc., the parent company of Square and Cash App, announced it is cutting more than 4,000 jobs. That is roughly 40% of its entire workforce, shrinking the company to under 6,000 employees. Block shares surged between 24 and 25% in after-hours trading on the news. The reason Dorsey gave was artificial intelligence. He stated that new AI tools have fundamentally changed what it means to run a modern company. He argued that a lean, focused team armed with AI can now match and outperform workforces that are 3 or 4 times larger. He set a target of over $2 million in gross profit per employee, roughly 4 times Block's pre-pandemic efficiency level. The numbers backing this up are real. Block posted $1036 billion in full year 2025 gross profit, up 17%. Q4 2025 gross profit hit $287 billion, up 24% year over year. He also admitted the company made mistakes during COVID when Block's workforce ballooned from 3,900 employees in 2019 to 12,500 by 2022. He called it overhiring. Now comes the correction. Restructuring charges are expected between $450 and $500 million, mostly hitting in early 2026. Now here's the silver connection, and it is not speculative. It is structural. Every single AI data center that gets built requires significant amounts of silver. Silver is used in electrical contacts, printed circuit boards, semiconductors, and the high-performance chips that power artificial intelligence infrastructure. Analysts at Business Insider, Oxford Economics, and the Silver Institute have pointed directly to AI data center expansion as a key driver of long-term silver demand. And the AI revolution accelerates as more companies follow the Block playbook, cutting human workers and replacing them with intelligent systems. The physical hardware demand for silver does not shrink, it grows. Every AI server rack, every GPU cluster, every new data center being built across the United States contains silver. This is the part that Wall Street is positioning around, while retail investors are still focused on whether silver is going up or down on any given Tuesday. Jack Dorsey's announcement is not just a fintech story. For anyone watching the silver market, it is a confirmation signal. The AI build-out is accelerating, and silver is the metal that makes it run. Let's talk fundamentals, because if price action alone is not convincing you to pay attention, the supply-demand picture should. The Silver Institute, the most credible source of silver market data, released its 2026 market outlook earlier this month. The headline finding is that the global silver market is heading into a sixth consecutive annual supply deficit in 2026, 6 years in a row where demand has exceeded supply. The projected shortfall this year is 67 million ounces. There is no inventory sitting in a warehouse somewhere that covers that gap. The market fills it by drawing down above-ground bullion inventories. That means every year the buffer gets thinner. Supply side, total global silver supplies are forecast to reach a decade high of 1.05 billion ounces in 2026, up just 1.5%. Mine production increases a modest 1% to 820 million ounces. Silver recycling is up 7%, surpassing 200 million ounces for the first time since 2012, driven by consumers cashing in on high prices, particularly silverware. Demand-side physical investment demand, coins and bars, is projected to surge 20% in 2026, reaching a 3-year high of 227 million ounces. After 3 straight years of declining coin and bar demand in the West, investors are coming back. They are watching silver break records. They are watching macroeconomic uncertainty increase, and they are buying. Industrial fabrication is forecast to slip by 2% to around 615 million ounces, because solar panel manufacturers are reducing the amount of silver used per panel as prices have risen. That has pushed the solar industry to accelerate substitution away from silver. It is a headwind. But here is the offset. AI infrastructure, automotive electrification, and data centers are picking up the slack. The Silver Institute cited expansion of data centers and artificial intelligence-related technologies as demand drivers supporting silver consumption in 2026. The future of this metal is no longer just solar panels and jewelry. It is chips. It is servers. It is the physical backbone of the digital economy. Jewelry demand is expected to fall over 9% to just 178 million ounces, the lowest level since 2020. Record high prices are pricing consumers out of buying silver jewelry in markets like India. This is the trade-off. What you lose in jewelry consumption, you gain in investment and industrial tech demand. Let me be direct about the analyst community, because the forecasting on silver in 2026 has been inaccurate. JP Morgan's global research team projected that silver would average $81 per ounce in 2026. That was seen as an aggressive forecast. Silver moved past $81 on its way to $120. The median forecast from a Reuters analyst poll sat around $79.50 per ounce. Silver exceeded that by the end of January. Now the banks are revising. JP Morgan recently updated its silver price targets. Deutsche Bank published a year-end target that reflects a higher level than what was anticipated at the start of the year. On the more bullish end of the spectrum, Robert Kiyosaki, the author of Rich Dad, Poor Dad, and a vocal precious metals advocate in America, has publicly predicted silver could reach $200 per ounce in 2026 dollars. Other analysts have cited targets as high as $375 to $400 per ounce, based on supply squeeze dynamics and the historical tendency for silver to overshoot when it breaks out. To be clear, nobody knows where silver is going. Not me, not JP Morgan, not Robert Kiyosaki. These are forecasts. They are educated guesses made with incomplete information. But what is not a guess is the structural deficit. What is not a guess is the AI and data center demand. What is not a guess is that silver set an all-time high for the first time since the old records from 1980 were surpassed. The practical move is to watch the gold-to-silver ratio. Watch the COMEX inventory levels. Watch whether ETF inflows are accelerating or declining. Right now, global silver ETP holdings stand at an estimated 1.31 billion ounces, according to the Silver Institute. Institutional money is positioning. Here is why this moment in silver's history is different from the cycles before it. In 2011, silver ran to nearly $50 an ounce before collapsing. That rally was driven almost entirely by speculative investment demand and ETF buying. The industrial story was a secondary factor. In 2026, this rally has multiple legs supporting it simultaneously. Let's count them. Leg 1, geopolitical uncertainty. The world is more unstable than it has been in decades. Tariffs are being deployed as economic tools. U.S. policy uncertainty is elevated. Concerns over Federal Reserve independence have entered mainstream financial conversation. In this environment, hard assets such as gold and silver attract capital. Leg 2, the AI revolution. As covered, every major AI deployment requires silver. Data centers, semiconductors, GPUs all use this metal, and the AI build-out is accelerating. The block Anchorage story is one data point in a global trend. Leg 3, the supply deficit. 6 years, 67 million ounces short this year alone. The cumulative deficit since 2021 is reported to be approximately 800 million ounces. That is structural pressure building in the background. Leg 4, the strategic mineral designation. Silver has been officially classified as a strategic mineral in the United States. It means the federal government has an interest in ensuring silver supply chains are protected and maintained. It opens the door to potential government stockpiling. It also means any disruption to silver supply chains will receive political attention at high levels. Leg 5, the recovery from January's crash. The fact that silver dropped 31% in a single day and is already back above $90 indicates underlying demand in this market. It did not stay down. It recovered. The buying on the dip was present and significant. Now, the honest conversation. I am not here to tell you to buy silver. I am not a financial advisor. I am not going to tell you silver is going to $200 or $400 because I do not know that. Anyone who tells you they know for certain does not have certainty. What the data shows, as of February 27, 2026, is that silver is in a sixth consecutive year of structural supply deficit. Physical investment demand is rising. AI and data center demand is creating a new industrial use case that was limited 5 years ago. The gold-to-silver ratio is at a 15-year low, meaning silver has historically been a value play relative to gold at this ratio. Institutional money is not leaving this market. The risks are clear. Silver is one of the most volatile assets available. It dropped 31% in a single session in January. COMEX volatility is elevated. Tariff-driven macro uncertainty can reverse sentiment quickly. Solar panel demand is declining as manufacturers find substitutes. This is a two-sided market with structural support and volatility risk. The best step you can take is to educate yourself. Size any position appropriately to your financial situation and make decisions based on research, not social media hype. If you want to go deeper, the Silver Institute's World Silver Survey 2026 drops on April 15th. That will provide a complete picture of where this market stands. I will be covering it here. To recap what you learned today, silver is trading near $93 per ounce as of February 27, 2026, up nearly 6% today alone. It set an all-time high of $121.67 on January 29th before declining 31% the next day. It is now in recovery mode. Jack Dorsey and Block Inc. announced the layoff of 4,000 workers, 40% of the company driven by AI. That story connects directly to silver's growing role in AI infrastructure. The global silver deficit is in its sixth consecutive year, 67 million ounces short in 2026. Physical investment demand is up 20%, and the gold-to-silver ratio is at a 15-year low near 57, a historically important signal that the market is watching closely. This video is for educational and entertainment purposes only. Nothing presented here is financial, investment, tax, or legal advice. All market data referenced reflects publicly available information as of February 27, 2026. Precious metals are highly volatile investments. Past performance does not guarantee future results. Please consult a qualified financial advisor before making any investment decisions. The creator of this video assumes no liability for financial decisions made based on this content.